Hello, everyone. It is my pleasure to bring you what I suppose is the marquee event of the evening, where I spend some time with our general partners, Dave Blunden and Mark Cassidy. We cover technology adoption, generational shifts, cloud computing, the API economy, insurtech, and even DeFi. And I do my best to keep up. I know you'll enjoy it. So without further ado, I'll turn it over to Dave, Mark, and myself. Mark and Dave, it's good to have you here.
Thanks, Fraser. Great to be here.
Yeah, likewise.
As I was reviewing my notes from our last conversation, it became fairly clear to me that I essentially just asked you questions that I wanted the answers to. And so this year, I actually have a brilliant analyst in Nick, which gave me the confidence to do a bit of work. And we decided to pull together some data on topics that you actually find interesting. And so my proposal is that we look at the data and we talk about it a little bit. How's that sound?
All right.
Data is always fun. It helps a lot.
I will begin with a Churchill quote, so please indulge me. He once said that a statesman needed the ability to foretell what is going to happen tomorrow, next week, next month, and next year, and to have the ability afterwards to explain why it didn't happen. And this is probably just as true of VCs. Here at Vestigo, we're concerned about the future of fintech. And so Mark, I hope you don't mind taking the first stab at this question, but what's defining the future of fintech today? I'm going to share some slides now.
Sure, sounds great. I think the thing that we look for are what are the waves that we can ride, right? So we think about technology waves or capability waves or attitude changes or whatever it might be. That's a wave that can be ridden into a new business. Or if you're an existing business, a way for you to change, what it is that you're doing or to find new growth. And so that's simply built in our first part of our thinking here around generational change that's occurring, right? The movement from one generation to the other, obviously the baby boomers going to the millennials. We think about the workforce and wealth creation and so forth. The boomers may have the assets, but the millennials are accumulating them very rapidly. And I think this chart does a nice job of talking about that in technological terms. That's a bit generational, but even more importantly, illustrates the speed of change. It's sort of my favorite couple things to compare are toilet adoption, which seems like a pretty basic need, and these aren't even the Japanese fancy ones, mind you, that took time to do. There's a lot of infrastructure to build, and I suppose change of attitudes for people. But away you go, and there's a certain pace of change. But compare that to something like the iPad, right? Or compare that to Amazon Prime. Massive adoption in very short amount of time, and that's generational, right? That's happening because the younger generations are used to moving faster. Technology moves faster, and their attitudes move along with it. I think another way to think about it is in terms of what's important to me or what's my reference point in a generation. This probably does an even better job of denoting a generational change. And a couple of simple ones are right here, right? Boomers love the postal service. Why, I do not know, but apparently we do. And Gen Z and millennials appropriately are more attuned as Google as their favorite and most trusted brand. So there's obviously a whole set of experiences that went into creating that connection to brands. And then you see it again on the right-hand side. Look at PayPal for millennials. The Cheerios and Hershey's for boomers. I'm worried about my generation. And so as we look at this, it tells us what's important to us at the time that we're most active in creating wealth or creating our work life or having success or having failures. But in any case, it's what's imprinted upon me as I work my way through it. And understanding these subtle generational changes are critical when we think about how fintech comes along and gets adopted.
I think it's also a very true sort of barometer of the experiences that we have. And you just sort of see the digitization of our experiences through this chart as well.
Absolutely. How much different is the experience of waiting for somebody at the post office versus getting it from Amazon, right? Or how different is the experience of a food-based set of products versus something that is a service like PlayStation or obviously Netflix. So to my mind, these are significant changes in the way we think about things. and not so much to be scary amounts of change, or we should be afraid of the amount of change that's occurring or its speed. We just have to recognize it, right? And once you recognize it, you can ride the wave, and that's what we're after as investors. What wave can we ride to success? This is a good example of what happens when you lock people up for periods of time, is they get bored and they start trading. That's one thing you can conclude from here. But the real activity to me is prior to the quarantine. Just look at what's happening there as it relates to a new brand, Robinhood, doing such a great job of getting the attention of, riding the wave of the generational change to millennials and their interest in accumulating wealth. They've done a great job of it. There was a brand called E-Trade, right? You can see it sort of is in the mainstream now, currently owned by Morgan Stanley. But at its time, in my generation, it was the one that broke through, right? It was the contender as it related to the generation that would be boomers. So just important to understand that generational change, because it makes you open up your eyes to what's possible. In my generation, I might have said, well, E-Trade did it all. What in the world would there need to be another trading app for? Well, it turns out that a trading app that's literally an app as opposed to going to a website, and making it super easy and a bit gamified for millennials turns out to be a pretty good idea as things go.
Rachel, I think if you go back
back.
to the trends, technology adoption slide, the lime green line on the far right, that's social media taking off. And as Mark pointed out, the flush toilets are the kind of dark line on the far left there. 120 years for every household to get a flush toilet, and less than a decade for almost every household to adopt social media. And then the trends are obviously getting faster and faster and faster. From a venture fund point of view, it's very easy to wake up and see something like TikTok worth $500 billion and go, where the heck did that come from? Unless you're very, very active in staying ahead of the trends, and which is one of the reasons we spend so much time on MIT's campus, Harvard's campus, and other places where the next generation of ideas are coming from, because they're going to be in tune in those environments with something in many things that don't amount to anything, but also a few things that amount to something huge. But as a venture fund, you have to sort through every single one of them to stay ahead of the trends. But if you look at the slide here, the core point is that that's only going to accelerate further. So you can never be complacent with your current rate of understanding. You have to understand as much, and then the rate at which you understand things has to accelerate with the acceleration of these curves, which means actively investing and thinking about how you're going to do it rather than just letting things come to you. So that's a really important trend.
And that is why we use data, and thank goodness we also have Python to do a lot of this processing for us.
Very true. So I think the other thing we touched upon is where do we reach consumers, and how do we think about other ways that we can interact? And most everyone thinks about sort of B2C, B2B, but the other thing that we know is important is your employer. And what we certainly have witnessed in the last few years at Vestigo is this absolute outpouring of need by employers to take care of and create opportunities for savings or whatever it is that's needed by their consumers. And we have some great companies, Clerky, Cushion, Retirable, others, Wagmo, that are lined up to take advantage of this kind of distribution and this kind of change in attitude by employers. We felt a few years ago that the employee distribution would be more important. That was a wave that we saw happening. And we now see with the pandemic and some of the labor shortages, it's getting massively amplified. So that's a really good example of one where we saw it. We can explain it, right? And then we took advantage of it in a number of company strategies, and now we're benefiting from that. So in that case, the Churchill quote is, we saw it, right? And we took advantage of it, and now we'll benefit from the growth of these companies in that wave.
Fantastic. Flexibility, I think in a business context can often be, somewhat amorphous, but we talk about it, and especially, modularity as well, specifically around API businesses and other kinds of enterprise SaaS models, which, from a practical perspective, I think the new thing is, if you have a B2B software business, it needs to be able to talk to other B2B software businesses.
Right.
But Mark, I'd love you to take this to start anyway, and talk a little bit about what flexibility means, why it's necessary, why it's possible in today's environment.
Well, I think the simplest thing is the cloud, right? One word does it. Number one, it's made it much less expensive to fund a startup and build a really interesting solution. That's first thing. Second thing is, that cloud companies are intelligent. If they can create an ecosystem where new companies can start inexpensively, it only builds them, a portfolio of clients who are successful later on. So there's plenty of reasons why this makes sense and why you're seeing this absolute adoption of cloud infrastructure that's there. So for us, it's a huge boon in those opportunities. And it again is a good example of where the old way of thinking about it was you and I, you at company A, me at company B, we have to interact and create an agreement, right, over sharing information or sharing ideas or sharing profits. And with the use of API and such easy interactions and interfaces in the cloud, now our machines can do that, right? You simply access the API portal that I've created, to access my information at a certain cost, and away you go. What could be easier than that?
And I think, maybe if you could touch a little bit on how this is mapping more directly into fintech.
Yeah, I think the simple way to think about it, and this chart does a good job of showing you that it's complex, is that it just think of anything in which I need to create a sharing of information or services, or capabilities, whatever you want to call it, can be done for the most part on API. And if it's not done on API, it's not going to be very valuable. And that's, I think, the lesson that we certainly take to our startups. It's what we look for in companies that we're funding, is this is the way this world will be built. Imagine you're an entrepreneur, right? And you're thinking about an idea or a problem you're trying to solve. At its core, that's what entrepreneurs do a great job of. And before, you had to build the interface to the bank. Before, you had to build the interface to something else. And then along came Plaid, along came Yodlee, along came a whole range of companies that allow you to make that easier. So one of the newest ones is Rails in our portfolio that makes the accounting data very easy to interact with and receive. Well, now I can not have to worry about the infrastructure when I build. I just have to worry about creating the value by pulling all that together and doing something different from our target audience. That is very powerful for entrepreneurs and should launch an incredible amount of fintech ideas and businesses.
And more importantly, Rails doesn't have to worry about what you're doing with the data. They're just sort of enabling it. It does make, in a lot of ways, the B2B business have a lot of the dynamic elements of consumer businesses, because you can distribute so much more cheaply.
Absolutely. Completely change that equation.
Takes us to our next slide, Dave.
I was gonna say on that one though, and with apps as well, Dave, I do think it's your perspective on how much that's changed in the time that you've been an entrepreneur and been an investor in terms of those tools.
Yeah, well, I mean, you could never overstate how much has changed. I mean, there was a year, a lifetime ago, 2005, where I was running a company called Vestmark, which has now become a major part of our technical infrastructure in the country in fintech. And Mark was running LPL Financial. And at the time, if you asked LPL, would you ever use a vendor that's hosted on a SaaS basis and use the cloud? The historical answer was no way. I mean, this is fintech. This is the most sensitive data you could possibly have in the country. And so what we do instead is we buy hardware from Dell and we screw it together in data centers, and we have some of the best engineers in the world that turn it into usable platforms. And when you look at the math behind that, and you look at the rate at which everything was growing, you don't have to be a genius to know that can't possibly survive, because there aren't enough engineers in the country or in the world to screw together those hard drives at the rate at which data is growing and infrastructure is growing. And so it's like Jeff Goldblum in Jurassic Park. He's like, something isn't going to work here, and I don't know how it's going to break, but I'm a mathematician and I can tell you something isn't going to work. And you got to dynamic. And so all these companies, Fidelity and UBS, and it's really, really, they were violently opposed to letting the data out of the building. But when you look at the underlying forces, it's inevitable. And that made, way back in 2010, you could see this coming and start investing in the theme. And now it's just, routine. Things that were unthought of before are now just absolutely, completely routine. And that's going to continue because the rate at which the world needs technology is still accelerating exponentially. And the rate at which people are graduating from colleges with computer science and engineering degrees is flat, if anything, slightly down. And so that's going to require more and more APIs that can be quickly assembled, platform engineering instead of code engineering, and cloud computing. And so those investment themes are inevitably going to be big winners, and you can see it in the valuations.
Makes a lot of sense. They're still making billion-dollar enterprise SaaS cloud companies. So
thank goodness for it.
Not going to stop. I think we've covered a lot of this piece. And I do think, people might be getting nervous at this stage that we haven't talked about the proliferation of consumer data and wondering what happens to the Vestigo employees. So Dave, I'm going to let you kick this one off and talk about your latest thinking here. And Mark, I expect you to chime in as well.
Yeah, so this chart is showing the data created each year in zettabytes. The way to think about a zettabyte, it's a billion terabytes. So a good way to visualize that is to say, well, okay, here my laptop has a terabyte hard drive in it. So each laptop is about a terabyte. There are 8 billion people in the world. So if everybody had one laptop, that would be about 8 zettabytes of data on all those laptops. You see the bar chart here shows that we're up to about 80 billion, or this year we'll be at 80 billion zettabytes, or 80 zettabytes generated a year. So that would be the equivalent of everybody in the world having 10 laptops full of data, and that amount of data getting generated per year. So that's a good way to visualize it. So it's just a colossal amount of data, and the cost of storing and managing it is plummeting every year, even faster than it's growing. So the overall cost is more or less neutral, even though the data is astronomical. So the implied thing, if you think about abundant data, the implied business models involve a huge amount of predictive modeling where you can know a consumer, like a financial advisor can know a consumer even before they arrive. The transparency skyrockets. Privacy becomes a big problem. So any investment related to giving people some privacy back is obviously a good theme. And you just can assume that everything is knowable, and then start investing with that as the basis, and just work forward from there. So then the themes you can invest in, I mean, these are just pure winners across the board. But within financial services, huge lifts, like 8x lifts in script optimization, where a consumer who's looking for something very specific, something legal, something in 401k related, you can know before they even start talking to you which person, which expert, or which web page, or which app, or which product is the perfect fit. It can be modeled in advance, which from a consumer experience point of view is like gold. Instead of navigating through complicated call centers and never getting the right answer, you get right to the correct answer. So really streamlining the consumer experience using data as the lubricant. So that's hugely investable, and you see that with Retirable and Clerky and Cushion. In the insurance category, very similar theme. People need all kinds of new insurance, coastal flood insurance, and all types of other complicated products that that were very hard to navigate to before become much easier to navigate to. Also, that's on the consumer acquisition end of the funnel. On the back end of the funnel, price optimization, so loss ratios and price optimization. So, you see that a lot. Safe driving is something everybody knows about, so that's an easy one to talk about. So you can get variable insurance costs based on how safe a driver you are using telematics. But much simpler things too, like people who rarely drive can get cheaper car insurance. People who, people who are in a low risk zone, is all knowable through big data. So you can get pricing if your house is in a lower risk zone, there isn't a tree that's likely to fall on it. That data is all captured through drone flyovers now. So you can get a lower price because your house is particularly not prone to tree damage, and then the drone flies over, and then the pricing changes in real time. So huge opportunities there. And then really big one in personal and business loans. If you think about the fraction of time that people spend dealing with debt, it's just an inordinate burden on society. And that one is getting cleaned up very, very quickly. It's just going to be a huge boon to society as a whole. So people who are creditworthy very quickly get access to credit. They can pay off their student loans, or they can get a student loan, and they can get a house. They can move on with their lives. They can also invest in businesses. Capital is very, very cheap, and if they have great ideas, they get funded, and they get at least to the the seed stage, so we can look at them. The big data fuel feeding that makes it dramatically more efficient than it ever was before. Also people who have unusual situations, nobody considers himself to be unusual, but everybody's unusual in some way. So a good example of that is you have incredibly creditworthy people that don't have a social security number. They're here on a green card or they're here on a student visa, but they're incredibly creditworthy. Previously, very difficult for them to get access to student debt or a credit card. And that's all getting solved very, very quickly using big data. It's really replacing credit score in a lot of ways as a much more accurate way to know who should get what amount of credit. And also the consumer acquisition side of that funnel has the same big data driven themes. So really across all these areas of endeavor, huge lifts.
There does seem to be a sort of overarching theme of predict when somebody needs a thing and deliver them a custom the thing customized for them and make it very, very easy to buy it.
Yep. Yeah, you see that in everything on this slide, and you also see it in the gig economy world, where the number of gig economy jobs, you see this with Jobble, the number of things you could do to make money is growing in kind of this fractal way. So things you would never have thought of. And because you would never have thought of it, you're never going to think to apply for that job type. So the data-driven AI can predict whether you might be interested in this, sports event bouncer job or something like that. And then proactively reach out to you and say, this looks like it's a good fit for you based on the data. Are you interested in doing this? And so that push-based alignment of skills with opportunities is starting to take over in the gig economy.
And think about what that means for incumbents, right, who aren't investing as much in that technology, those engineers, or may not be as aware of the selection bias that's occurring because they're still using the old way of doing it with credit rating systems, for example, versus a new way of doing it. And that's part of what happens in any good economy is destruction of the old and building of the new. So we're also looking for companies like Formotive that help the insurance industry do a better job of understanding what the consumer wants, what their behavior is, how to make it easier to apply, and what intent is in terms of how they're filling out forms and other things. So there's lots of great ways to help the incumbents see these things and get scale in a different way. But it also means that businesses can start, as Dave, you were saying, that have a real information advantage, that makes them very powerful very quickly.
Yeah, it's really, really fascinating to see the interaction between cloud computing and the API. So if you think about cloud computing, API economy, Alloy, companies like that, making it very easy for other companies to create entire apps, user experiences, and businesses with relatively few engineers. At the same time, the data-driven modeling is kicking in. Right. So then you see this opportunity to get companies that, in the old days would probably take you 5 years, 30, 40, 50 engineers, 10, 20 million of venture money. Instead, they're getting to market in year one with 6, 7, 8 people and unit profitable, like right out of the gate. Like, how did you get so much functionality together so quickly? And so we used Plaid and we used Square and we used Stripe and we used, Yodlee, and these things are all out there ready to be glued together. So that multi-tiered cloud computing API-driven economy enables the creation of all these things that society needs very quickly and effectively.
Yeah, that's a lovely way of describing DeFi, right, in its best way. I deconstructed finance into these pieces of idea or information or APIs, and now I've reconstructed it into some new capability, and I've done that, as you say, very cost effectively. Those are killer apps in terms of new businesses, and wonderful for us as investors, because we can let the entrepreneur can go crazy by having that infrastructure already built.
Yep, and that DeFi trend too is if you look at the brand slide, which was slide 5. The millennial and Gen Z consumers are more than happy to try new brands because they've kind of realized that the incumbent brands are stuck in old ways of doing things. And there's just a lot of friction in the old way, filling out paperwork and waiting for months to get products. And so they're very, very trusting of new internet brands. And so that timing is perfect from a seed stage venture point of view, because somebody like a Jobble or a Cushion or a Clerky can launch, and they've got no pre-existing brand, yet the consumers love them. Net promoter scores in the 90s,
Yeah.
And consumers are willing to just give it a try because that's sort of the way everything seems to be working now. You know, everybody's like, well, Amazon came along and it was great. Other things are
Well,
going to be
and
great.
it has an immediate feedback loop, right? With Jabo, you get a job, and with Cushion, you get a rebate on a fee that your bank charged you. I mean, these are wonderfully reinforcing in terms of I tried it and it turned out to be a good thing. I want more.
Well, gents, I do love having these conversations for a number of reasons, but also it just gets me fired up and optimistic. Sometimes the day-to-day we're focused on, slightly more mundane matters. But I really appreciate you both making the time, and I'm looking forward to next year's conversation.
Thanks so much.
Thanks,
And thank you to all our LPs who invested with us and will continue to be good stewards of your capital.
Thank you. Bye, guys.
Thank you.